Welcome back, everyone, to the Audacious Money Witch channel, where we talk about the magic behind the stock market. Hey, y'all! Today we are diving deep into the stock that everyone loves to talk about, often loves to hate, but the one that I believe is on the verge of making us 8 times our money in the long run. Yes, I'm talking about Tesla. Now, I know, Tesla is expensive. Elon is controversial. The numbers don't look good. I've heard it all, and so have you. But what if I told you that the market, and especially the short sellers, are looking at only 1/3 of the story? They're missing the forest for the trees, and those trees are growing into a multi-trillion-dollar empire. I'm going to share something personal today. I bought Tesla stock, and I bought it for reasons that go way beyond just the Cybertruck. Although seeing that Cyberbeast in person for the first time was definitely part of the aha moment, I'll tell you the exact price I bought in, why I'm so bullish, and why Elon's audacious trillion-dollar pay package and Tesla's master plan are about to benefit us tremendously. Plus, we're going to break down the recent technical breakout on the Tesla chart that signals this rocket ship is refueling. Let's get into it. The short seller's blind spot. All right, let's address the elephant in the room. Tesla is the most expensive and most heavily shorted stock among the Magnificent Seven. The short sellers are screaming about its P/E ratio, which is over 200, way higher than even a powerhouse like Nvidia, which sits around 50. They point to double-digit revenue declines in the auto business and say, on paper, this is a no-brainer short. But here's the thing, you guys, those numbers they're looking at, they're in the past. They already happened. What the short sellers are missing is the future, the unseen numbers that aren't on the spreadsheets yet. They're missing the robots, the robotaxis, and the energy storage that are about to transform this company. Tesla is not just a car company, it's an AI and robotics company that happens to make cars. Think of it like this. Porsche makes beautiful 911s, refining them slightly year after year. Apple, primarily an iPhone company, focuses on planned obsolescence. They slow your phone down over time just to keep you upgrading it. But the iPhone 17 is even worse than the iPhone 16 in terms of weight saving. Tim Cook is a financial operator. He's no Steve Jobs when it comes to product innovation. Elon, on the other hand, is a talent magnet, especially for engineers. That Cybertruck, it's almost a finished hardware product, not designed for planned obsolescence. Every Tesla model gets better over time with software updates. They're not trying to sell you a new Cyberbeast because of a slightly upgraded front camera. Tesla is building something fundamentally different. The Master Plan 4 and the AI revolution. This brings us to Master Plan 4 and why Tesla is an AI play, not just a car company. Well, the auto business has seen some recent declines, down 13% in the first half of 2025. That's only part of the story. Tesla's full self-driving hardware and software suite is in every vehicle, turning them into potential robotaxis. As of September 2025, their robotaxi service has actually launched in Austin, Texas, operating without human drivers on public roads. This is not just a future promise, it's happening now. And then there are Optimus robots. Elon expects to start selling significant quantities of these humanoid robots in 2026. Imagine the impact on labor, on productivity, on dangerous tasks. Optimus's mission is to give people back their time. This is not just theoretical. Tesla's R&D expenses are increasing even as revenue dips, showing they are investing heavily in this innovation. They're building the future, not just iterating on the past. The short sellers don't see robot sales on the income statement yet, but as someone who's invested for over a decade, I've learned to look beyond the current quarter and envision the long game. And the long game here is massive. The energy and pay package catalyst, but wait, there's more. Tesla recently unveiled two massive game changers for its energy storage business, Megapack 3 and Mega Block. These aren't just batteries, they're utility-scale energy storage platforms designed to turn intermittent, renewable energy like solar and wind into reliable power. Mega Block simplifies installation by 23% and cuts construction costs by 40%. This isn't small potatoes, folks. Tesla energy storage business generated $11 billion in sales over the past 12 months, up 43%, and deployed 37.9 gigawatt hours of capacity, up 83% year over year. This segment, which accounts for 12% of total sales, is booming, and analysts are increasingly bullish on it. And let's talk about Elon's new $1 trillion compensation package. While it sounds astronomical, it's designed to motivate him to push Tesla to achieve 12 ambitious operational milestones, including taking the company's valuation to $8.5 trillion and putting 1 million robotaxis on the road. Tesla's chair, Robin Denholm, even highlighted that Elon's creative energies in other ventures, SpaceX, Neuralink, XAI, actually benefit Tesla, bringing unique perspectives and resources. This isn't just about money, it's about aligning an unparalleled visionary with unprecedented goals. This kind of moonshot thinking, this willingness to risk it all and invest in innovation, even when revenue is down, is what sets Tesla apart from a company like Apple under Tim Cook. The technical breakout and my bullish stance now. Let's get down to the technicals. For those of you who've been watching the charts, you know that Tesla has been consolidating, but recently we've seen a decisive breakout. The chart shows Tesla stock price breaking out of a symmetrical triangle formation. This is a classic pattern, converging trend lines, a descending one of lower highs and an ascending one of higher lows. After all that consolidation, the stock surged upward, blowing past the upper resistance trend line. This is a strong signal of a shift in momentum from sideways movement to a new uptrend. Crucially, this breakout was accompanied by a significant surge in volume. That's key. It confirms the strength of the move, and it tells us there's serious buying interest. This isn't just noise, it's conviction. Now, looking at our Fibonacci retracement levels, Tesla has already powered through the 38.2% and 50% levels of its previous decline. The next major Fibonacci resistance is the 61.8% retracement, sitting around the $425 to $430 range. If we can break and hold above that, it's incredibly bullish. Given the strength of this breakout, a reasonable price target is to revisit the all-time high, which is around $488. This isn't some far-fetched dream. It's a target supported by technical momentum and the clearing of key hurdles. And let's not forget the short interest. While Tesla is heavily shorted, it's still down year to date, which creates fertile ground for a short squeeze. The Magnificent Seven average short interest is about 1%, but Tesla sits at about 3%. As this stock gains momentum, those shorts will have to cover, pushing the price even higher. Every innovation tech giant wants a piece of Robotaxi, from Waymo to ZooX, but Tesla has the edge with its camera-only approach, which is cheaper to scale. So where did I buy in? I started building my position around the $330 level right after that Cybertruck revelation. I'm bullish because I believe we are on the cusp of a revolutionary period for Tesla, primed for the unprecedented growth. That 8x return I mentioned, it comes from understanding that this is an AI, robotics, and energy company, not just an automaker facing temporary headwinds. This is a long-term conviction play rooted in innovation and visionary leadership. So what are your thoughts? Are you joining me on this Tesla rocket ship, or are you still on the sidelines? Let me know in the comment section below. And don't forget to like this video and subscribe for more real talk from Audacious Money Witch. See you next time.
Tesla. And as we were trying to help people understand why we were swapping away from NVIDIA to stocks like Tesla and Palantir, which is a software provider, we were trying to explain that this new world around AI is going to happen very quickly. And Tesla is the largest AI project on Earth. I posted that on X, and Elon liked it, so it must be true. But it is true if our research is correct. We believe that the entire ecosystem associated with autonomous taxi networks is going to be worth $8 to $10 trillion in terms of revenue generation in the next 5 to 10 years. And if you want to put that in context, the entire GDP of the world today is about 130 trillion. So 10 trillion is going to move. We knew that if Elon Musk could create a reusable rocket that could land on a barge in the water, he would be able to figure out how to produce at scale. Our prediction in 5 years is 2,600, and 90% of that valuation comes not from the electric vehicle, but from this Robotaxi platform. Because the electric car, if you think about it, is, a one-shot sale happening faster than we thought. And the reason it's happening faster is humanoid robot. They are the convergence of the same three technologies or innovation platforms as robotaxis. Robots, robotics, so actuators and so forth, getting them to work, energy storage, battery operated, and AI. So Tesla's way ahead of the game on humanoid robots, and yet we have very little. Now, Elon thinks that the humanoid robot business is going to dwarf the robotaxi.